My breakout system has flagged a few massive tech names as well as a few dark horses to potentially break out over the next couple of weeks. So in this video, I'm going to be showcasing to you which stocks could potentially be the best opportunities to be momentum trading at this moment. I'm going to be backing this up with intrinsic valuation formulas and basic financial analysis to see where these companies really are. So without wasting your time, let's get into it. So if you're new around here, this is my breakout score system. It essentially compiles a lot of data from a vast majority on my Excel sheet here and from online resources to potentially indicate which are the best breakout stocks at the moment. And currently, I've never seen so many breakout stocks being flagged. I'm not going to be showcasing all of these, but if you would like to see all of these for yourselves, I will do a quick scroll through here so you can see, if I move my webcam, you can do your own due diligence on these stocks. But in this video, I'm going to start this off by looking at Palantir. So Palantir are currently ranked first. Ignore the top section here, it's a bit of an error, but they are actually ranked first on my breakout system, yielding a result of 28.81, which is absolutely massive. Anything above a 10 here is ranked as a potential breakout, so for it to be pushing 30 is ridiculous. But Palantir does come with its own set of risks, of course, as its current PE is 614. That is just absolutely massive. I mean, it kind of does beg the question whether or not this is a sustainable stock, but whether or not it's sustainable doesn't mean that it's not one in which can be successfully momentum traded. As you can see here, I do have them to be intrinsically positioned at a sell. They are currently at $124 and I have a bullish price to be set at only 11 and a bearish price to be set at 6 and a 9-year growth to be set at $83, meaning that this year is only set at 9. And when they're all the way up at 124, it's obvious why I have them at a sell. But when we do see here on the day chart, we can see that they are into a long position and the momentum is absolutely ridiculous. It doesn't show any signs of slowing down for Palantir at all as their earnings approach on Monday. I do think it is going to be very important that Palantir beat estimates by quite some margin to really help push this momentum. I think if they fall short with their outlook or any sort of macro data, I think it's really going to hurt Palantir, as of course they are currently at a 654 PE. They really can't afford a poor earnings report. Furthermore, on my price indicator here, we can see that they have taken the top spot on the mean. Again, ignore this NDB. Looking at Palantir here, they are the best company on a 5-day basis. So what do you think about Palantir? Do you think it's a bit of a risky stock to be momentum trading, especially with their earnings coming up and the fact that they are massively overvalued? Or do you still see there being promise and a potential higher breakout even after their next earnings report? Okay, so next up we're going to be taking a look at Hims&Hers. This is a company in which has done absolutely phenomenal and they give me a current breakout score of 22.69. When comparing them to Palantir, it does seem like they have a bit more momentum on a volume side, especially here. As you can see, they are pretty much one of the only companies right now in which has a positive volume within the US market, which is incredibly strong as it shows the price increase is supported. Furthermore, for an intrinsic valuation for Hims&Hers, I have recently downgraded them, as you can see here, but I still think that they are, currently now after this breakout, fairly valued. I have a bullish set to be at $43 and a bearish to be set at $23. And when they are currently all the way up at $40, I think it's fair to say that intrinsically the momentum might have to end here, but that doesn't mean to say that the volume won't carry through. As we can see here, they are looking to open up into a long position within the next couple of days. It is important to obviously state that this could all come crashing down relatively quickly. It's just the indicators are saying that there is a lot of momentum behind it. But when you do look at this, it does look as if it does have the possibility to fall back down. But again, it's really hard to tell. But the next level of resistance is probably around here at $45. And then after that, it's probably all the way up at $69. With Hims&Hers recently being up because the market is reacting to strong Q1 earnings report and telehealth growth, the valuation for Hims is still unprofitable on GAAP or a GAAP basis, but has improving margins on a forward-looking business model. Furthermore, the stock has done really well ever since they announced that they are teaming up with Novo Nordisk, which is just absolutely incredible, as these are seen as weight loss competitors a lot of the time. So to see them teaming up is absolutely brilliant, and it's only just going to do wonders for their stock. And I might have to redo my valuation now that this has happened. Of course, they do also have their earnings coming out on the 5th of May, so people could potentially be bracing for this, as we are seeing the price spike up again since this announcement. It did drop back down, but people are now gearing up for a strong outlook, in my opinion. So the next stock in which we are going to be looking at here is, of course, Netflix, which has done incredibly well as of recently. With Netflix now testing multi-year highs, they post strong earnings and ad tier traction increases. This is definitely an earnings-driven breakout, as we've seen here, and the next earnings is obviously set all the way in June, so Q2 is quite a long way away, of course. But on paper, it does look fairly valued relative to its peers, as it's maturing but still growing its subscriber base. But that is just on paper. When I do a intrinsic valuation calculation for Netflix here, we can see that I actually have them to be overvalued on a Graham's formula. On the bullish side here, I have them set at $1,027, sorry, with the current price being all the way up at $1,156. It's obviously priced in at a sell, even with the, of course, margin of safety. And on the right bearish side here, I have an intrinsic value set at 568, with the mean of these being 797. So for that reason, intrinsically, I've put this stock at a hold, but I do think there could be a lot of momentum still yet to come, as they don't look massively overvalued, especially when a company like Netflix just continues to grow and their earnings are incredibly strong. I mean, they are currently growing at a 20% rate year over year, which is just incredible for a company as big as Netflix. So it does show promise for a lot of momentum, especially when their earnings are a triple beat. So now moving on to Constellation Energy. This is a stock in which I think has a really high potential to be a brilliant breakout stock going forward into the next couple of weeks here. We can see that it is still relatively in early days, and it does have its earnings report coming up here on Tuesday the 6th of May, so we could see a lot of gearing up for that. It is now just about in a long position on the day chart, which is incredibly bullish, and on a moving average we are now above all of these as well, which again is just going to help push this price further up. So looking at an intrinsic valuation for Constellation Energy, this stock looks to be massively undervalued for this year's growth, indicating that this could be one of the best potential momentum stocks to be trading. I have a bullish intrinsic value set all the way up at near $500, with the current price being set at 250-ish. We can see that there is a 2x potential in this stock currently, and on the right bearish side, I have an intrinsic value set at 275, which is just barely above where we currently are. But when we do add in a margin of safety of 25%, we are actually positioned in at a sell with an acceptable buy price at 206. If we go in between the two here, I have an intrinsic value set at 383 and an acceptable buy price at 287. Furthermore, according to Peter Lynch's valuation, this stock yields a result of 1.7, indicating that with its dividend included, it looks to be massively undervalued currently. And on a discounted free cash flow analysis, we don't get very good results just because their free cash flow is consistently negative. So I do think it is completely fair to be putting this company in at a buy currently. I think there is a lot of potential for it to climb up massively in the next couple of weeks. So this is definitely a stock, especially if they have good earnings reports, that could go absolutely parabolic, and it could be one in which you could enter into a very cheap price currently. So what is the recent news surrounding this company, and what is the justification for this breakout? Well, nuclear and renewable energy plays attract more capital as of recently, and it did have a clear resistance break above 190 here, so it's just continued to climb back up ever since. So again, it's a company in which could do absolutely great, and it does have some solid macro tailwinds behind it, potentially pushing it up. So I am actually going to end this video here, but before you click off, I would like to also state that New Holdings is a stock in which could do absolutely fantastic next week, but I am still going to end this video here just because I feel like it gets a bit too long. But if you have enjoyed this, please do let me know, as this is something in which I've been wanting to do for a while now, is display my breakout score and tell you which stocks could potentially have momentum next week. Of course, this doesn't mean that they are going to have momentum, but it does show good signs that it should have momentum. But of course, when there's macroeconomic issues around the US market as a whole, everything's going to change anyway. So you do have to do your own due diligence with this, and keep informed into what you're investing with, because I'm not a financial advisor. None of this is financial advice. But if you have enjoyed, please do let me know. Leave a like, subscribe. It would be greatly appreciated, and I'll see you for the next video.